trading at its best.
Okay, welcome everybody to the webinar today. Let's just do a quick sound check and make sure you guys can use the chat. If you can type in a Y if you hear me okay. Let's see, here we go. Okay, everything's good. Well, let's do this. We've got a newer group. We've been kind of changing things up. Some of you have been with us in the Forex 101 series, and now we've shifted into Forex Weekly. And so we'll go ahead and, as most of you should know, I'm Mike Swanson. And so instead of Nate did the 101 webinars, I'm going to be the one doing these. So things are going to be a little bit different. I like to, kind of just talk about all the different things. When we talk about a subject, I don't really go into a lot of different slides, and it's more just kind of follow me along through the charts, through the website, web pages that I like to show you. I'll stop throughout to answer questions, and so it's going to be a little bit different, but I think you guys will enjoy it. We've got a lot of good things to talk about, especially today with automated robots. So let's go ahead and these things never want to start off in order for me. So automated trading robots is what we're going to be talking about today. And the first thing we're going to cover is the difference between a good robot and a bad one. And that might seem really general, but there's some things I can look at. I'm going to show you that I look at that in a matter of a few seconds I can tell if it's worth even giving it 10 seconds of your time. So we'll look at that first, and then we'll talk about timing a robot. I've taught about this in the past, and I'm going to show you some different things that'll that you can use for timing robots that'll actually put you in a much better position, because a lot of times you start trading a robot or an automated system and you get started at just the wrong time, or that's what it seems like. It seems like you get started trading with it and that's when it loses. And it always seems like bad luck, or just your luck to have it work out that way, but there's things you can do to prevent that. We're going to look at some important statistics, and don't worry, I'm going to try to keep this simple, but there's some things that if you understand just a little bit about them, a little bit about what you're looking at on some of these sites like MyFXBook, and some of these reports that you see with different robots, you'll be a lot better off when you know just a little bit about some of those statistics. And then last, we're going to talk about semi-automated trading and tools. So what I'm talking about here is taking robots and actually properly manually intervening, manually taking over and closing trades, moving stops, targets, different things like that, but actually doing it successfully. I know a lot of people try to do that. You might have tried to overwrite and think you could do better than the robot, and a lot of times you're wrong. Okay, so let's go ahead then and take a look at the difference between a good robot and a bad one. Let's go on to, I'm going to bring up a very popular website is MyFXBook. Most of you, how many of you have not heard of MyFXBook? Is there anybody in here that has not seen MyFXBook before? They haven't been around maybe just a couple years, and they really became popular, I'd say, maybe in the last 2 years, maybe a year and a half. Looks like most of you have heard of them, getting some yeses. So, okay. Well, let's go to their website. I'm going to show you around this site a little bit, because this is where you'll find most robots posting their track records. Now, is there anybody in here that has never heard of a robot or never traded with a robot? This is your first time really hearing about automated trading. Is there anybody that's at that level, that this is all new to you, robot trading is all new to you? I just want to get a feel for the group we have today. I'm sure most of you have, but is there anybody that has not traded robots or heard of automated trading? Okay. I've tried several, yes. Yeah, I'll make sure we're showing the screen. I just had to bring this page up. But thanks for reminding me, Hal. Okay. So it looks like I don't have anybody in here that's saying no, so I'll just skip the basics on robots. Okay. So on this website, this is a place where, like I say, most of these systems will publish their track records here. There's several others we could look at, but this is probably becoming the most popular. So if we go over here to Systems, and we could click on Most Popular if we want. These are the ones that are just showing insane gains. And here's a really popular system we could dissect. It's Forex Growth Bot. How many of you have heard of that robot? As you guys can see, I ask a lot of questions in these webinars because it really helps, get everybody involved, and so you can take the most away from these webinars. So if you can just participate, if you've heard of this robot, Forex Growth Bot. I've got some yeses coming in. You can just type in a Y or a yes or an N if it's a no, however you want to do that. Okay, this one was really popular. I can't remember what they sold it for, but it definitely was a retail system that was being sold. And the first thing you can see here is that they've obviously got a ton of people following it on this website. You can see the gain. This is the overall return that they've made on the system. You can see the drawdown. This is a percentage of drawdown. And then you have whether it was a real account or a demo. And that's a really important part because demo trading, of course, can see extreme differences, especially with robot trading, where systems can be programmed to manipulate demos. And it's with certain brokerages. Not all brokerages work that way, but it's always best if they're, of course, if it's a live account, real account. Tells you whether it's a technical system, fundamental system, or if it's automated, manual, or mixed trading. And they got a little curve here of the performance. So if we click on this, you're going to see a very nice equity curve where it's just growing, 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 huge percentages being made, and then you start seeing these drawdowns is what it is on this equity curve. When this thing comes down really hard like this, you're taking losses on your account. They have a yellow line on here and a red line. The yellow line is your equity, and that means if they had open positions while you're in losing trades or winning trades, that might be different. And I'll show you some robots that look like that. But for this one, they're pretty much the equity is right on top of the actual balance that's growing. So we can say that they're not really holding trades and then using other trades to make up for it. But there's strategies that do that and work as well. But anyways, you'll see that there's these pullbacks. These are the drawdowns of the account. And then recently there's been this pretty significant pullback. And this is, these little drawdowns, or this is kind of a big drawdown here, but these drawdowns are what really turn people off and, cause you to have to move on to the next system because most traders cannot withstand a drawdown like this. Emotionally, psychologically, whatever it is, if they get in a loss like this, they're out. They think the robot's trash and it's, they should give up and move on to the next thing. And that probably happened back here. So, all this great growth, people were jumping on, buying the system, it was great, everybody's making money. And then right here, a lot of people got in right here. This might be one of you, some of you that you feel like you get started at the wrong time. We'll talk about timing here in just a minute, but you might get started right here and you start losing for the next month or two, however long this drawdown was. We could possibly even see that. We'd have to go into some details to see this for sure, but you could say it looks like it's probably about 2 months, around 2 months. And if you're losing for 2 months, whether you started here or just before that, and you're losing all your profits, you're most likely going to give up. Happens all the time. And I'm going to show you another website here in a little bit where you can see that exact thing happening, where a ton of traders get on board a system, it starts to fail, a ton of traders leave it and go to the next one. And as obviously with our hindsight here, that was not a good decision to leave, because obviously it took off again right here and made a ton of money before the next major drawdown. Okay, so now I told you we're going to talk about the difference between a good robot and a bad one, but I just wanted to first just show you this. The most popular system that's making the most money is not immune from these drawdowns. So a good system doesn't have to have a perfect smooth curve, linear curve, or just, these little tiny drawdowns. That's been very difficult to find long term. This system's been trading since 2010, November. That's a pretty long track record, and now things have gotten real volatile towards the end here. You can see towards the end here it's just had a pretty decent, saying 47% is probably what this drawdown is here at their max. 47% drawdown, that's really tough to go, 3 years and make all that money and then get half of it back. So does that make this a bad system, or is this the best time to buy into the system? That's what I'll be talking about with timing. But let's just back up. So a good robot, like I say, is not going to have to have a perfect linear curve. As we look through some of these, you're really not going to find that. So let me go back. Let's go back to the previous page. Need to clear off these drawings. Okay, so here's the top 10. These are the most viewed, and then they also have, you can follow the systems. Here's the most followed systems. And you can see that most of these systems, have pretty decent linear curves, but they all have bumps throughout the, along the way. So if we go into, let's see, let's go into the second one here, this Wall Street. Okay, let me show you some things we can look at to find out if this is a system we would even want to trade. I mean, it has, most of you I'm sure are looking at this number right here. How much did it make? What's the equity curve look like? How much drawdown did I have? You're looking at the three basic things: return, ROI, drawdown, and how the curve looks. And obviously there's a lot more information on here than that. And so let me show you some things here that you should be paying attention to, and how we can tell the difference between a good system and a bad system, or one that might be looks really good but might not even work for us in, with our particular brokerage, or or has a very high chance of failure. Maybe it's doing well now, but it has a high chance of failure. So I'm going to kind of jump along. We've been talking a little bit about timing, and we're going to talk about the statistics now and just kind of cover it all at once, really. But some of the statistics you'll see down here, they've already made it simple for you. One of the most important things I look at is Sharpe ratio. If you look down here, if you hover over this, it will tell you the Sharpe ratio is used to characterize how well the return of an investment or asset compensates the investor for the risk taken. The higher the value, the better. Okay, so this number at 0.08, we could do a comparison. We can go back and compare robots, and we might find one that doesn't have as high of a return, maybe has a worse drawdown or a better drawdown. Maybe the curve doesn't look as good, but the Sharpe ratio is much better. And what that means is if we're, say we're risking 5% on each robot, basically the one with the better Sharpe ratio is going to make us a lot more money with that risk that we're putting up. So I'll try to make more sense of this when we do a comparison. You'll see the differences. Okay, so that's one thing we'll look at. And then the other thing here that's really important is expectancy. Tells you what you can expect to make or win or lose on every trade. This account is expected to make $2.27 on each trade, which is 1.5 pips. Okay, this you got to be really careful about with some of these systems, because you might see that it's only going to make one, like even this one, 1.5. What that means is if you're getting slippage, let's say you're on average seeing 2 pip slippage. that means your curve on this would almost probably be in a mirror image, or is definitely going to be losing money. Maybe it's not a mirror image, but your curve might look like that just because this expectancy is so low, and maybe your brokerage is not getting the best fills, and you're not getting the exact same results. It's so tight here that there's not a lot of room for slippage or spread. Okay. Someone here was saying to zoom in. I don't think it lets me zoom in. I guess I could do that with my. Is anybody else having a hard time? If is this not clear on the page I'm on? I might be able to zoom in. It's clear. Okay. Yeah, it might be the different resolutions between us. Let me see if I can try to. I know you can. I can do something like that. Maybe that's probably what you guys are looking for. All I had to do was hit Control plus, or you can hit Control minus. That's what I did on my. So if you're ever on a website and everything's too small, that's just a little trick you can use. Hit Control plus, hold down Control and then plus to zoom in, or Control minus to zoom out. So that I could probably even go one more. That might make it a little bigger for you guys that are on laptops or on lower resolution. Okay. So let me jump back down here. Okay, so like I said, we look at the Sharpe ratio and expectancy, and I can tell you these are both pretty low. When we start doing some comparisons, you'll see, but this is pretty low. Basically, the closer to 1, the better. You're not going to really find anything too close to 1. Most things, some of the best systems are going to be 0.2 to 0.3. An expectancy, that one's kind of tough too. If you can follow the exact same brokerage and try it out and you're seeing the same expectancy or you're not seeing slippage, then you should be okay. But if this is too low, you have to just keep that in mind, that might be one of those factors that when you go and trade it with your particular brokerage, the latency you have, if you're not using a BPS or whatever, there's a lot of different factors. You might not have the same results, and those two factors can be a big reason why. Okay, all this other stuff is you guys are probably familiar with. Profit factor is even pretty familiar. If you use MetaTrader and you look at some of these robots, they always talk about profit factor. I don't really put a lot of weight in that one anymore. I mean, you could look at that if you'd like, but I would really look at this Sharpe ratio. Standard deviation sometimes helps a little bit too. Tells you basically if they kind of got lucky on a few trades, but you can usually tell that on the equity chart. But if you see the standard deviation is really high, that means they probably kind of get lucky on trades. Maybe it's from news or just a few big trades are making up their gains. But that's not always a bad thing. It really just, we'd have to look at the equity curve and see on those. Which one would be a good brokerage to get? We can talk about brokerages a little bit towards the end here, but I know we trade with FinFX. I'll just post a link for you guys on that. I'll just post the link to the brokerage we use, FinFX. You can click that link and take it over the account page. And we just go with the micro account. But you can definitely open up micro and ECN. You need to try both of them. But we've been with them for quite a while and have done pretty well. So, but I can talk in more detail on that here in a bit. So anyways, we looked at one here. Let's now do some comparisons. Let's show you the difference between a good robot and bad using just these few things we've talked about. One more thing here. Look at the leverage they're using. That's another thing you have to keep in mind is some of these guys are really putting a lot of leverage out there. 1 to 500. That's a lot of leverage, and you might not be able to have that. Now, this doesn't mean they're using it all. They're not. You don't know for sure if they're leveraging all of that, but there's some things we can look at to determine that as well. You can look at the max number of trades they had open at any given time. Let's see. I know they have that somewhere in here, lot size. One way to do it is just look at some of their recent history, but here's their lots. You can take their trades divided by their lots and get an idea what their average lot size is. But one thing you can do is look at their recent history. Look at the open times, close times, see how many lots they have open at any given time. See if they're really over leveraging. It's one other thing you have to look at. But let's do this. Let's back up now. Let's go do a little comparison. So let's compare, let's see. I'm probably going to need to know each system, but okay. I think it's going to want me to log in to do this, so give me just 2 minutes here. Yeah, Dennis, FinFX is good for U.S. accounts as well. FinFX still allows U.S. accounts to have up to 300 to 1 leverage. They say 200, but you can make a request and even get to 300. And also there's no hedging restrictions, no first in, first out. They're still offering all of that. Very easy to open an account. Okay, so let me sign in here so we can do this comparison. Okay. Just give me another minute here to get this back up. Okay, here we go. So what you do here is, and you might not even have to be signed in to do this. I figured I would just sign in anyway. Let's just save it in different things. But if I go back here, oops, I don't need to go back, but we'll go back to this page. I'm going to take Forex Growth Bot. We've looked at that one, and let's just compare it to Tom ZA's on here. We'll talk about that robot a little bit too. They're currently allowing traders to test it out, and I'll show you some of my results with that as well. Maybe let's just compare it with Tom ZA. So what I can do here is add this to Watch, and now I can go into my Compare Systems. I've added Forex Growth Bot already, so I can take Tom ZA, Forex Growth Bot. Okay. Now, let's see if we can get down here and look at those statistics. Okay, here is your Sharpe ratio. Let me see if we're looking at the right one on this one too. Okay. 0.08. 1.9, okay. Okay, I don't know why. Oh, I know why. Okay. It's just putting the ones that are in red, it's basically saying are worse than the other system. So it's like GrowthBot is at 0.09, very close with TomZA at 0.08, but you can see side by side which one is better on each of these different things. And so obviously GrowthBot has been trading longer, and so it has a much higher return. But TomZA's balance is higher. They've been trading more money, and they started with, I think, 10,000, and it's at 38,000. The drawdown on TomZA has been better. Obviously, here's that deposit. They put more money in. These guys only put in $250, and these guys put more money into the live account. TomZA takes more trades. Maybe that's not necessarily a good thing or a bad thing, but Chris is asking, do these robots hold positions overnight? We can determine that by the average trade length. So you can see average trade length TomZA is 3 days. Average trade length on GrowthBot is 12 hours and 34 minutes. This one's made more pips. This one averages more pips and averages a smaller loss. But like I say, all this different stuff, I don't really pay attention to all these other little things. The only thing that really matters, Sharpe ratio. We said we could look at profit factor. That one's definitely better on TomZA. Expectancy is much better on TomZA as well, almost more than twice as much, $7.54. And then the Sharpe ratios are really close. And then, like I said, the other thing is the does it have it in pips? I guess it doesn't have it in pips, but expectancy, like we said, that is probably one of the most important because of it. It's really if you're looking at an expectancy that is, like we said, 1 pip, 2 pips. It's really, you got to make sure you're trading the same brokerage as them or getting the very close fills. Otherwise, you could get completely different results. Yeah, Hal says many stats are apples and oranges, apples to oranges, time-dependent, deposits, withdrawals. That's right. That's why I don't put a lot of attention to all these other little things, because just because one made more pips doesn't mean anything. I know a lot of you probably, that's something you look for, is a system that makes you a lot of pips each month. I've built systems that have made 10,000 pips a month, and they don't really make a lot of money though. They're just scalping with a ton of different positions, and you can't really leverage up those positions. So I could explain that on all these different factors in here, but the best thing to do is just focus on the ones that matter. Like I say, Sharpe ratio, expectancy is good places to start. And maybe even profit factor a little bit. Okay, so both these were automated technical systems. Anyway, so now you get an idea how you can kind of compare some of these, and really both of these are decent systems for being on real accounts for that long, and both of them had some drawdown though. I mean, how many of you guys have tried TomZA? I know they came out with it about 2 years ago, I think. Let's just do this. Give me just a minute. Okay. I'm just going to post another link here. So here is, let me make sure that link works for you guys. Okay. So he's got a little, this is Destin Pass's product. I've actually met Tom, the guy that created the robot, and he's got some pretty good stuff. The thing is, he uses a statistical money management approach that, just like I like to do. Put more of the effort in the money management, as you've seen with all of our different tools with PipStat and even Momentix. its key feature is money management. And that's kind of how Tom's EA is that's why a lot of you, if you've tried it in the past, if you just had slightly different settings or had it set up, just a little bit too risky, you could get yourself in a lot of trouble because of the money management. But anyways, you can throw your name and email in and download it. They've got a trial going. I don't know when it's going to expire, but you can download that and try it out. Let me just show you my account that I've got running. You can see kind of what it does. Okay, so it'll run on MetaTrader. Most robots are built on MetaTrader, and you see I've got it running here. I followed their instructions to the T, and that's kind of the key, is make sure you're setting up your risk parameters the way they suggest, because if you go more aggressive, you get greedy, or you try to make more money than they are, even though they allow that, the settings allow you, you can get yourself in a lot of trouble. As you can see, their drawdown, one time they went down 46%, and if you had a little bit more aggressive settings, you would have gotten margin called potentially, or wiped out most of your account. Yeah, it looks like Hal said he even had a 40% loss, and he quit. Well, that's the tough part. I mean, right there is quitting just before it takes off again. If we go back and look at Tom's EA, for example, there was that time, drawdown. If you quit right here, it was the worst time to quit because it took off and gained everything back. I mean, it took a while. Maybe you moved on to something else and you did better with it, but yeah, just like Hal's saying, that's when you need a lot of leverage and guts of steel. So that's why it's tough. If you have 50 to 1, you're probably going to need a lot more money in the account. That's why we go with FinFX, is it gives us more flexibility with having more leverage available for situations like this. Rather than having to invest more of your own money in, you can leverage the broker's money. I always try to do that whenever possible. That's why for me, I usually don't trade very big accounts. I would rather trade smaller accounts more aggressively and use the broker's leverage that they're giving me. Okay, so anyways, let me just bump back over to this account I'm running. I've only been running it since they released this out back on the 15th, but still it's 9 days, and it's won almost every single trade. I'm up 525 pips, which is, with the default settings, is 5%. So 5% in 9 days isn't too bad. Now I have some trades that are in a little bit of drawdown, but it's only down 0.8%, and overall with my equity I'm up 4.4%. So, but we're not going to spend a lot of time talking about this robot. I'll probably, probably next week, if we have enough interest in it, we'll come back and really dig into this one and look into it and answer questions about it. But anyways, you guys can use that link I posted, and you can download the demo, the trial. You could even put it on a live account if you want, but they suggest always, starting on demos, and that's what I would say with any system, is get familiar with the settings before you go live. Okay, so anyways, let's bump back over here. Okay, so we could compare a lot more systems. These two are both pretty decent as far as overall, if you're able to stick with those drawdowns, maybe you just lower your risk settings. If you don't like these 46, 47% drawdowns, for me that's pretty steep. I usually don't want to see more than 25 to 30%. And I've talked about this in the past, that recovering from a certain level of drawdown, if you start climbing up to 50%, that's going to be tough. If it's a closed trade drawdown at 50%, you have to double your money to get that loss back. So if I were to scale my risk back to 30%, I might not make as much money as they did. However, if I had that same drawdown, I might actually recover faster. You see, at 25%, I've only got to have about a 33% return to get back that loss. So 1/3 the amount that I would if I were at 50%. Anyways, that's for a different topic, for money management and understanding all of that. Some of you might have been to my trainings in the past where we talked about that. But let's bounce back over here now. Let's look at some more. We'll add some more for comparison. Okay, so let's just go back into, let's see here. Let's just go into systems. Actually, let's go back into most popular. Okay, so here's another one that's pretty popular system. Equity curves kind of bounces around quite a bit, but overall it's making money with drawdown a little bit lower than the others, 37%. So let's add this one to the watch. And I can scroll down here and even just look at these real quick. Sharpe ratio is even lower than the others, down at 0.06, but the expectancy has gone up to 2.6 pips. So that's quite a, another pip higher than the others, and less chance for failure the higher that number, because of broker differences and things like that. We have some more questions coming. Let me make sure I'm not skipping any of these questions. What are good numbers for the three categories you just named? Like I say, for Sharpe ratio, it's going to be hard to find something that's over the long term, over 0.1 or 0.2. But really, if you can get a system, if you find a system with the Sharpe ratio 0.2 or 0.3, that's an extremely good Sharpe ratio. If it's under 0.05, it's probably not a good idea to risk your money with that system. And with the expectancy, I wouldn't trade a system with expectancy less than a pip. As long as, if you got it at 1 pip, you just have to make sure you're using a VPS. Give you guys another link on that if you'd like to learn more about VPS. We actually have our own VPS service that we offer. You can go to impressvps.com. Posted that link for you. And you can even try it out for a month for free. But with robots, besides just latency and being able to make sure you're getting the best, fastest execution, it's also extremely important that your computers don't go down, that your hardware doesn't fail, that your connection's fast. So VPS solves that problem. It's V as in Victor, VPS, Virtual Private Server. It's basically a computer that you get that you own space on. It's basically a big server, and all of your files are immune from everybody else's. It's like your own little personal machine, and you have access to it from any computer. You can access it from your phone, your laptop, a friend's computer, your desktop, but it'll look just like you're on a just like you view this webinar. Actually, it'll be just like you're looking at your own little computer. You load all your files, load all your robots, put everything you want on there. Excuse me. Put all of your trading on there, and that way you can turn off your own computer, and everything will stay running reliably. So that's what VPS is. And so anyways, if you get all that set up and you've got an expectancy of 1 pip and maybe your Sharpe ratio is good and that's why you want to trade it, but your expectancy is low, just keep an eye on it. Keep an eye on that you're not seeing too much slippage. One way to do that is using some of our tools that we tell you your execution spread. And execution spread will tell you the actual spread you're getting when you enter your trade. See if it's matching, your broker's spread, and if it's changing much, if you're comparing your results to these guys', if you're going down here and looking at their trades, and they're making 56 pips and you make 55, that's not good. You're going to be eating into that expectancy, and overall you're going to be probably losing money. So you have to keep an eye on it. The closer you are to 1 pip is what I would say. Then the other one, we've got the profit factor. That one really is kind of tough. The other two really kind of cover that one to me, but obviously your profit factor, if you can get it up over 1.5, then that's pretty good. There's some systems that are 2 or 2.5, and that's really pretty rare to see something last, if it's a day trading system at least, because that means their risk to reward ratio is pretty pretty solid, and usually you don't see that with day trading systems. Most of the time you have to take on more risk than you can gain as a day trader. So Hal says he's got a trick question. What is better, win-loss percentage or win-loss size? So yeah, that's something you have to consider. Is that's one factor you don't want to put a lot of thought or a lot of trust in, is just the win ratio. I know a lot of you love to see a system that wins 80-90% of the time. We could look at this one and see that they won only 56% of their longs, and they won 49% of their shorts. So they're really only averaging, 53% of their trades are winning. So just over half. So Hal says that's kind of the trick question, is like, what's better, winning more of my trades or the size of my wins and losses? So basically my risk-to-reward ratio or my win ratio. It's a combination of both. If this guy is only winning 53% of the time, you're probably thinking, how is it even making money? And that's because of the money management that he's using and the risk-to-reward ratio. So if he's making slightly more, you can see it right here, he's averaging 36.84 pips and averaging a loss of 35.85 pips. Because of that, it's profitable, because he's slightly winning more trades than he's losing, and he's winning slightly more per trade than he's losing per trade. It's a profitable system. But all of that stuff is really factored into this expectancy. Basically, for any trade you take, you can expect, whether you win or lose, out of 100 trades, you should expect to make 2.6 pips per trade. So, 260 pips. And then that's 26 cents because he's trading a micro lot. So you can just scale that up. It's really simple. If you're going to trade 2 micros, you're going to average 52 cents per trade. So maybe you have a trade that lost $3 and a trade that gains $4. You have all these trades. If you added them all up and divided them by the number of trades you took, you should have seen 26 cents per micro traded. Yep, that's what Hal just said. He learned that they're all combined in expectancy. So that's why I say that all this other stuff is just confusing to understand and learn. Just pay attention to expectancy and that Sharpe ratio. And the Sharpe ratio is really, like I say, secondary to expectancy. You first need good expectancy, and then the better the Sharpe ratio, the better the system. Okay, so we've hammered this stuff out quite a bit. I'll let you guys, compare more of these systems. I did add that one. I guess we could go back in here, but we could compare that one we just looked at with some of these. But that's how you want it. That's how you want to do this. Just grab a couple of systems that you're interested in. Come down here and compare their expectancies. Obviously, this one's showing Tom's EA at $7.54. Now, what you have to look at, though, is that pip amount as well. Since they're trading different lot sizes, that's great. That's why they're making more than the others, is because of their money management. But you just also want to come back in here and make sure their pip amount, isn't down at 1 pip or lower. And the closer, like I say, it is, the more cautious you want to be in keeping an eye on things. Okay. Well, let's move on then. The next thing we haven't really spent a lot of time on yet is timing a robot. So let me show you some tricks you can do here. What we're going to do, how many of you have heard of Zulu trade? Give me just a second and I'll bring up this page. Put a yes if you've heard of Zulu trade and no if you have not. Okay, well, let me post this link. Okay. So if you guys want to click that link, I posted it in the chat. I'll go ahead and show you guys some cool little tricks you can see on here, and also we'll talk on this side about timing robots. And I'm going to show you how some of these others on here are doing the same thing. Okay, so if you click that link, let's see here. Okay. Are they reliable? Well, they've been around for a long time. You can see, look how much, this is how much transaction volume is going through Zulu now. For their first few years, quite a few years actually, they really didn't have their stuff together. There wasn't, I really didn't put a lot of attention on with them, but lately they've made things a lot easier to, a lot more transparent. They've made it a lot easier to get the information you need. Just like MyFX book, they give you a lot of data. These guys do the same thing, and then they allow you to follow other traders on here. So that's their main thing, is you are able to come on here, do some research on some of the top traders, or sometimes not even the top ones are the best ones. Sometimes you might find a guy that's number 100 that might fit your, look like a better trader. And I'll show you some of that here in a minute. But you can follow them. It's really easy to set things up with them. And so what I had is I had an account at FXDD that was on MetaTrader. I just went into and opened an account. You can click Register, create a new account, and then you can choose an existing brokerage that you have if you already have a brokerage, or if you want to use one that's MetaTrader 4 compatible, you can do that. I chose FXDD. You can tell them, yes, if you have an account, you just put in your account number. And then you'll fill out an LOD form, and that's it. It's transferred over, and then you can follow traders. But if you don't have an account, you can continue and set that up. But if you guys need help with that, just jump on our live chat or shoot us an email. I just want to show you how we can time systems and how some of these followers on here are timing systems. So what you have here is you go to traders and you can look at some of the top traders. And this is where you'll see the top guys are swapping around all the time. The number one guy seems to change almost every other day. Sometimes you'll have somebody in here that lasts for quite a while as number one, but what happens is this ranking is made up of many different factors, not just their performance. It's also based on how many followers, how much money is following the trader, how long it's been traded. All these different factors go into this. And what you'll see is, this guy here has 2,044 traders, live accounts following him. This one down here has 6,200. He was number one yesterday when I last looked, and he's been climbing his way up. But these positions change all the time. There was a guy, let me just go down and show you one I've been following. I think he's number let me just go type him in. Okay, there was a guy I was following. He was number 50 something when I followed him. I did some of my own research, found he had a pretty good setup long term. Everything kind of matched. I'll show you some of those things I look at as well. But he eventually climbed to number 3, I think it was, and we can see that by clicking Performance Ranking. And you can see kind of his history as he's climbed his way up. He got in the top 10 back in December, kind of fell back, and then he came back up. And then just recently, it was right in here, climbed up here to number 3, May 4th. Okay, when he climbed up to May 4th, a ton of people jumped on. Tons and tons of followers started jumping on and following this guy. Well, let's look at let me go back and look at his equity chart. We'll do that. Actually, let's do that just in a minute. Let's look at some of these comments. Okay, you're going to see all kinds of comments coming in here, negative about people that stopped following him. You'll see someone was talking about there were, 2,000 more followers a week ago, so tons of people are falling off and leaving. And this comes down. This is why I want to talk. This is why I'm going to talk about timing. if you leave a system after a little bit of drawdown, usually it's a big mistake. Not always. Sometimes you might have got out at a good time, but it seems to me like most of the time, let's see if I can spot this one in here. Seems like most of the time you leave a system is just before it's going to win again and get back on track. Let's look at his track record. Okay, this is the guy I'm talking about. Now, people that started back here did great, amazing, making a ton of money. And people that started here, this is when most of the followers jumped on. Most of these people that saw him in the, as we saw, he got into number 3 here. Everybody jumped on board. And then what happened? He went over this little hill and had some losses, just like he did back here. He had some losses here, had a loss here. He's had drawdowns. But right here, when all these people jumped on board and he lost, they started posting bad comments. They pulled their money from him. They went and looked at something else. And he's just, to me, it's like, why would you leave so quick? But to them, it's like, all I've seen is losses. They got started at just the wrong time. To me, this looks like it's about to bounce back up. What do you guys think? Does this look like, if you were looking at a trend, let's say this was the market. Let's say you are deciding if you should buy or sell here. Are you more likely to buy this or sell this? I mean, this is probably more like you would look at a stock. Most stocks are, you're always looking for buying dips or, buying the trend. Well, this would be a great place to buy, right? This is the time to join a system. And that's where timing comes in. Sometimes it's bad, you'll be at bad timing, you'll be joining right here, but I wouldn't join right there. In fact, when I started following him, it was back here, back in March. I started back here and I've experienced some gains and I've gave it back now. I'm still up slightly, but I'm not going to give up because I know this is a good place to actually add more. Now, I could be wrong. It could fall again. And if it keeps doing that, it could be a flop trader. But that's why you don't, the next thing is you don't invest all of your eggs in one basket. You don't invest all of your money into one trader or one system or your own manual trading. You want to have a lot of different things going. And let me show you what some of the top Zulu traders and followers are doing. So if you go to ZuluTrade.com, you'll see traders and their records. Let me show you a little secret resource I found. Is you go to ZuluTrade.co.uk. If you go to the UK site, they have more information here. Now if I click traders, I actually have a tab called followers. If I click followers, this will show me the top followers that are out there doing what you can do, which is select traders to follow and set up your risk settings, and then you can manually override them, or you can turn some off, turn up your risk on some. You have all this different control, but you can see what some of the best guys following other traders are doing. Now some of them, seems like some of them do get lucky if you look at their curves. This guy kind of had a rough start, and then he didn't give up though. He jumped on in February and did pretty well. Got hit here. We can go look at some of what he did here. I've already done a little bit of research on this guy, and he was following some of the top #1 traders, and when they'd get hit, he would manually take over the trades or cancel the system and add a new one very quickly. He was really quick to change systems up. So even though he took a big hit here, he immediately changed gears and got back on track. As soon as he took a hit, he got back on track again, and that's why he's doing so well. But if we click on this guy, we can go in and see kind of how he times things. Okay, he's doing a lot. He's traded a lot of different a lot of different people. If you click on more here, you can see who he has followed in the past and who he's currently following. So he's followed 17 different people, and he's currently following 4. And you can actually see the settings that he's using. They have like a copy traders settings back here, or show settings. So if you create your account and set that up, you can copy his settings. But anyways, the key thing with this guy to make money was timing robots. That's why we're talking about this today. It's part of the webinar, is because to make a huge difference. Some of these guys he was following blew up, and such as I know this guy right here, Comma Spot, was number 1. Okay, he was number 1, and then everybody started jumping on and following, and it took a dive. Now he's climbing back up, but when it took that dive, this guy over here that was following him cut him quickly and moved on to the next one. So there's a bunch of different strategies you can use, but you can learn a lot from what some of these different guys in here are doing with the different providers that you can see. If you scroll through some of these pages, you'll eventually find, here's that Good Life system that was number 3 now. You can kind of see some of the things he's doing. But let me show you, we had somebody say, put a 38% fib on that equity chart, and that's where you would get in. So that's what I do, is exactly that. I like to take the equity curve and analyze it like the markets. And for me, let's go back and look at some of these guys. Like, let's go look at that number 1 trader. Okay, number 1 trader now is this guy, Analyst EUR. He just barely came up here. Okay, for me, I do not want to invest in this guy. As soon as they hit number 1, if I do get on with them, I want to be very cautious and keep an eye on it, because there's probably a pretty good chance that it's going to make a retracement, and it's going to probably have a drawdown. You can see his past. He's had a drawdown here, 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 here. Small one here. He's due for a drawdown as far as I can see. And you're not always going to be right, but you're going to be better off being more conservative and getting in after a loss when everybody else is leaving. Okay. Now we could look at we could look at this Good Life. He's taking some losses right now. Well, if we were to draw, we could do, like somebody said, do a Fibonacci retracement, or you could even just draw this trend line. It's pretty much right at that trend line. This is a good time to start following. Another thing you can always do is maybe you start you started up here with a mini lot or a micro lot. Bump your risk up here to 2 micros. It's almost kind of like you're using money management to try to make up for their drawdowns, but if it comes down here, bump your risk up to 3 micros. So when it gets down here and it bounces up, you're going to be making a lot more money than if you would have just put everything in up here or in here. So that's another strategy, is the whole scaling in. It sounds kind of strange, but it's like you would do in trading, scaling into it. So instead of just jumping on, maybe that one I just showed you a second ago, the guy that's number 1 right now, maybe he does continue. Maybe his track record goes for another month. So rather than having to wait, put a micro lot on him. Watch how it goes. If he draws down, go bump it up to 2 micros when it does pull back and have a drawdown. Is that making sense? Now, it's not. I wouldn't do martingale. I wouldn't double up every time. I would say, let's say you have a full mini lot that you're going to normally trade. You might start off with just 1 micro, and if he keeps drawing down and you keep seeing different levels, then you just add 1 micro at a time. So eventually you hope to find the bottom of his equity curve, so when it heads up, you're making good money. If not, you're in no worse. You're actually in a much better position than if you would have went all in right now with your full mini lot. So if you went in right here, started trading this, following this guy today at 0.1, started trading this system, and it draws down, you're just stuck, and you're going to lose a lot of money. But if you started up here at 0.01 and it had that happen, you're losing 10 times less. Then let's say it bottoms out here and you start to see it go back up. Now go to 0.2. You don't go to 0.2, 0.4. You don't keep doubling. I mean, you could try that, but that's like Hal says, martingale hell. Really aggressive money management can get you in trouble. But something like this is just typical scaling in that works very well for timing systems as well. Now let's also look at TomZA, because that's another one that's, I'm sure a lot of you are considering, using that system. It's not the same thing here. With TomZA, it's already in that drawdown. Do you see how this? You see this recent equity, this equity line that we talked about? This is him in open positions. He hasn't taken the loss yet, He's taken a loss on a few trades, but overall he still has open positions that are in this drawdown. So this is actually a great time to jump on board, because look at some of these past drawdowns. They've bounced back. This one, it took a while to bounce back, but you're going to make money during that bounce back. So here you don't have to scale in as aggressively. Maybe you normally were going to trade 0.1 up here. Maybe you go 0.05 here because it's already in a drawdown. And then as it starts to climb back up and things get back on track, then go to your 0.1. Do you guys follow what I'm talking about here with timing? It's kind of like a money management mixed with waiting for, I guess kind of like watching it like the markets. It's a very effective strategy. As you can see, some of these, like I've been showing you, these followers on Zulu are doing that very effectively. Some of them are just getting lucky. You have to keep that in mind, and you can tell that by some of their track records. You can see this guy was just humming along, then popped way up and popped way back down. That's pretty volatile tradings, and he might just be getting lucky on some of these. Who knows exactly what he's doing? And most of these couple top ones are like that. So if you start to skim down, you can see where some of these guys smooth out. This one's doing very good. Nice smooth curve. He's got some drawdowns. It's nothing, straight up where he's taking huge risk and not losing any trades, but he's doing pretty well. The other thing to look at is how long. Some of these guys have only been on for a couple weeks. Others have been on for a year. So here's another pretty decent one, but it's kind of short term. So anyways, this stuff's really interesting. Take some time and skim through there, and maybe you even just copy some of their settings to get started and kind of follow it. And Hal says, my hacked curve looked just like that one. Probably, I think you were talking about probably this one. So yeah, they it says 9 months. Yeah, there's definitely some people that have really figured out the system on here, and they're following different traders and doing really well. There's others that get on here, follow the #1 guy, and every time they do, they get burnt. And there's plenty of those, so don't fall into that trap. Skim through here, find some of the systems, and put them in a portfolio. Start with low risk settings, and look at what some of the top followers are doing. Now, I'm going to probably have another webinar, maybe in a few weeks, where I'll put even more focus on just Zulu trade, show you some of the followers and the statistics in here that you can look at. But we're getting close to running out of time, so we'll save that for another day. Okay, so anyways, those are a couple resources you can use, and how you can look at timing. Let's see what else we've got here. Okay, the last thing we want to cover before we wrap up is semi-automated trading and tools. So this is something that's, like I showed you, is already being implemented by some of these traders in here. I've noticed some of them, they get in there and manually close trades. Okay, let me show you this. Let's look at this guy again. Okay. So this guy is, he's got his, we'll talk about, like I said, this stuff in another webinar, but he's trading pretty aggressive based on this little meter here. But anyways, if you go down and look at his settings, this might not matter because, or some of his trades, because he is closing trades before the provider does, before the trader does. If we were to go look at, for example, we'd have to go look at some of these, but let's just do this. Let's go look at this one today from New Wave. He closed a trade, the last 2 trades for 10 pips. Let's see if that's what the provider did. Okay, the provider actually closed it for 11 and 12 pips. So you can see he is closing them a little bit early. we could go back and see if he's taken this loss. There's times where he might have, it was up right here, 8 pips. He might have closed it out with that profit. But anyways, the point I'm going to make here is that some of these guys are using the semi-automated approach. They've kind of learned that some of these guys' systems, and you guys probably have seen this as well, that a lot of robots, they might be up 10, 15 pips, and then they give it all back and take a loss. And you might see that over and over. How many of you have had that, that desire of just like, I wish I could close this strategy, or this trade with a profit, or man, I wish they would fix it and just take it out for 10 or 15 pips. How many of you feel like that where you've seen systems that you wish you could get them to just change the system to do that? Getting some yeses on that. And it can be really frustrating. But one thing you have to consider is if these guys did the right thing and did thorough testing on their system, they might have found that was that the system parameters that they're using, the different targets and stops, are actually better than if they were to cut their profits short. However, a lot of them don't adjust for the current market conditions, and you might be able to pick up on some of these patterns and actually have some success with it. The mistake that traders make is think, they see it always go up 5 or 10 pips, and they just close it out, and they want to close the trades out and take a small gain. And then it's the type of system that loses 30 or 40 pips. So you end up with this terrible risk-reward ratio, and you actually cause the system to lose money. So that's one thing you got to watch out for. So let me show you something you can do using one of our tools to solve that problem. And so you can actually use a mathematical approach, a statistical approach, using a tool that does the calculation for you, and you don't have to try to figure out if you're making the right choice, taking a 5 or 10 pip gain on a system that you keep seeing go up and come back. Anyways, let's bring my charts up and I'll explain how that would work. So the tool, of course, you guys are probably familiar with. If not, I can answer some questions about it, but it's PipStat. And PipStat is it's for manual trading, but you can also use it for semi-automated trading. And eventually we're hoping to turn it into where it can just take over a robot and do everything for you using our calculations. So let me show you. Dan was saying some systems have better entries than exits. Yeah, I've seen that. You see that all the time. That's exactly why semi-automation can help a lot with those types of systems. So if we bring up PipStat, how many of you do not have PipStat, or you haven't heard about it? This is a program that we've created for automatically determining the ideal stop loss and take profit. So if you don't have it, type in a no. I've got quite a few of you that say you don't have it. So look, rather than telling you all the little things that it does, the big reason you would want to use PipStat is that the main reason is that it calculates the best stop and target for you based on your trading and the market, both conditions. So that means it's constantly fluctuating and updating and staying in tune with the market. Okay? So for those of you that aren't familiar with it, that's its key benefit right there. And what that does, and as a result, is that trying to get you the best stop loss results in that's how we determine your lot size. So you can see it results in a larger lot size. The smaller stop, the larger the lot size. And the larger the lot size, the more money that you're going to make when you hit your take profit or when you close the trade. So that's its primary job. Figure out the best stop that has the smallest possible chance of being hit, the biggest target with the highest chance of being hit, and then the highest lot size we can get based on that stop. Does that make sense? So you can see I'm manually changing these, but what really happens is it does it all for us. Inside here we have the unique ID. And this is, if you have a robot that's trading on MetaTrader, you simply enter that robot's ID. That's how you would do this. Or if it doesn't have an ID, you would enter 0. Now, any trade that it makes is going to be recorded, analyzed, and calculated using our algorithm, and then it's going to spit out a stop and target that you should use for the next trade. A couple of you are asking where you can get it. I can probably give you a link that you can maybe get a trial set up or something to try it out. But it was offered for those that joined our Momentix program. But I can get you guys possibly a link if you stick around here. Let me just show you how you would semi-automate your trading with this. Okay. So if you get the robot set up on your account, or let's say you don't have MetaTrader. Some of you are saying, does it work with Ninja? Here's what you'd have to do, and it's kind of a little bit of a pain, but it's worth the hassle. And like I say, we're working on our own. I don't know if you guys knew this, but we're working on our own trading platform that will incorporate all this stuff. NinjaTrader accounts, other broker accounts, so it's all in one place and you don't have to do this. But for now, one thing you can do so that you can use this with any robot, even Zulu trade, everything, is just copy the trades onto this account. So take the same trades as the robot does, but let PipStat calculate your stop and target for you. And watch the difference. Watch how you might trade with a much smaller stop and a better target and make money on trades that the robots lose. You'll see that all the time where, let's just show you an example. Let me go to a chart real quick here. And let's just bring up this blank chart. Okay. So you'll see this all the time. Okay, you guys, I'm gonna show you something that you're gonna probably think, wow, that happened to me last night or last week, because it's very common. Here you are. Let me get this backed up here. Oops. Okay, here you are with let's say you're in a buy trade right here. Maybe your robot went in or you went into a trade. You're in a buy right there. Market heads up and you've got your target right here. Or maybe it's a little bit higher, but either way, it doesn't get hit. It keeps coming so close, so close, so close, and then it drives down and maybe your stop was right here and you get stopped out. And then the market went up. Many things that hurt you here. Very frustrating. That can be the trade that drives you nuts for the rest of the month, how it didn't get out just another pip. Or if it wouldn't have got stopped, if the stop would have been right here, I would have been able to hold that trade and make all that money. This happens to robots, it happens to manual traders, and that's why PipStat, what its job is to after you close a trade, let's say you did get closed out right there. What PipStat does is after the trade's closed, it continues to watch the market. It sits here and watches the market, sees what happens, and then it says, okay, what could we have done better on this trade? How could we have traded this one better? And then it takes that trade, adds it to some of your other trades that you've taken in the past, goes through some formulas, and spits back a stop and target that you should use. Okay? So it comes back, and let's just say on that same example that you bought right here. Oops. So you've bought right here. Now, instead of it saying put a stop right there, it's probably going to say put a stop right here. And instead of a target just right there, it might put the target up here. I mean, that's best case scenario, but I'm just giving you a really clear example. Is rather than getting stopped out or just missing your target, it's going to say it would have been better to take a little bit more risk and capture the bigger move. And that would be reflected in PipStat. It would come in here and 120 pips maybe and a 25 pip stop. Calculates your lot size. You took that trade and did much better on it. But it's telling you that information before you take the trade. And it does that all without any intervention. Someone's saying, do I have to do anything? Is that all without my intervention? But yeah, that's right. It's going to automatically do all of that. And so Hal's saying, how does PipStat override what a robot does? Wouldn't the robot get all screwed up? So that's why, like I say, it would have to be, what it has to be is semi-automated. We're hoping to have a version of PipStat in the future that allows you to just put on, turn on, overwrite my robot. And basically it could take over your robot without messing up its settings. Right now what you're basically having to do is copy the trade that the robot took, or if you don't want to do that, if you don't want to copy it over and do the different lot size and all that, if you just want to get out of the trade at a better price or have a smaller stop, whatever, what you can do, like I say, just turn it on, put in the unique ID, and then to not have it mess up the trade, what you do differently is just manually modify the stop and target. So in here, PipStat's going to calculate a stop and target. Your order might come in down here for your robot. Maybe your robot put in a let's do this. Let's bump this down. Let's say PipStat says 20 and 30. Let's say your robot pops a trade in. This is saying to do 20 and 30, but your robot did, let's say it did 40 and 60, or 40 and 50. Basically a bigger target and a bigger stop. Well, PipStat is saying that's not going to happen. You have a higher chance of hitting a 20 pip target and a 30 with a 30 pip stop. So all you have to do is right-click the order and modify it. So it's, like I say, it's semi-automated, which means you're going to be there to make these adjustments, just like you would do anyway. Those of you that are sitting there thinking, wow, we should get out right now. Why doesn't it take this 10 or 20 pips? Or the stop is way too wide. Now, rather than just hoping you're right and putting something in that's different, you can use PipStat's numbers that it calculates that do make sense statistically. Plug those in, and you should be a lot better off. Anyways, hopefully I haven't confused you on how that works. We can definitely get on the live chat with you guys after if you need help setting something like this up, but it's not really that difficult. What you can do is look at your trades, hover over some of your trades if you have a robot trading. It says 2000 for the ID on mine, and so I would go in here and put in my ID as 2000. Okay, if it's a different number, just whatever the number is, hover over it. You'll see the ID. Hover over some of your trades that your robot's taken. If it has an ID of 0 or no ID, put that 0 in. But basically, once you do that, that's all you have to do. Plug that in, and then after you've done that, it's going to instantly, actually that'll be with 1.22. We're going to get this release out possibly today or Monday. But what it'll do is automatically go back and look at all of your trades and then instantly give you the best stop and target for the next trade. So as soon as your robot takes a trade, look at what the stop and target is and then change it to PipStat stop and targets. So you might want to try that on at a demo first so you can get a feel for it, but then compare it. See the difference between your robot by itself and then your robot with the better stop and target. And that's the best thing you can do for if you're having those feelings of you want to take over the robot or get out of a trade early. Okay, so actually it looks like Ramin possibly has a link. Let me just check this out real quick. For those of you that are saying, where can you get PipStat? And this is something that we haven't done before. We didn't really plan to do this. He hurried and just created this page in the last 15 minutes. We kind of had a template to work from, but anyway, he threw something together, so it should work. But let me just post this for those of you that are looking to get PipStat or at least try it out. Try out some of these things I've shown you. Okay. Go ahead and click that link in the chat if you don't have PipStat and you're wanting to try it out. What he's put up is a way you guys can try it for $1 for a month, and that way you can give it a shot. But anyways, go ahead and you can do that. Let's just see. Let's answer some questions here. I might have missed some, so I want to bounce back, and then we're going to get ready to close the webinar down. Okay, so let me back up here. Do I need my internet to be open? That's where you would want to use a VPS. A VPS allows you to have robots trading, systems trading without your computer even being on, without your internet connection or anything. Of course, you'll need connection to get on and set it all up, but once you do, it runs all by itself. You'll just have to check in periodically to make sure everything's going the way you want, or to make sure everything's, check on your trading. You always want to do that regardless if you're on a VPS, but everything will run securely and reliably. Hal says, I would call that on-the-fly curve fitting. I know you believe that it really works, so no point in asking. I really want to try it. No time yet. Too many black swans hitting me always. Yeah, there's a lot of stuff going on. It's probably best to really focus on one thing at a time. But that's why it would be nice when we get PipStat into an automated version where it can just automatically take over any system you have running on your account and just put in a better stop and target and lot size for that trade. But that'll take some work to get implemented. Nothing comes up when you click the link. Well, I just clicked the link myself, and this is what should have came up. Let me show you guys. You can see here's our live chat down here. And it's off. We're offline at the moment, but you can still use that to post a message and we'll respond to your email that you put in. But this should have came up. Let me just give that to. Is there anybody else not seeing this page? It works for me. Okay. Let me just give you this link again, Dennis. So I sent it directly to you. I don't know if that'll make a difference, but okay. Let's see. Many robots don't put stops and targets, so we can manually place or change. Next lot size is more difficult, right? Don't know what robot is going to do and can't stop it from doing it. Yeah, so if they don't put stops in, PipStat's still looking at the trade regardless of that and making a calculation that if it did have a stop or target, that's the best one to use. So you could still put it in, but as far as the lot size that it determines, that is more difficult. That's why automating it does take more work, because there can be different systems that take more than one trade at a time. Maybe it takes 10 trades at a time. Well, that's where that's where things get a little bit complicated. But as far as just putting in a stop or target, what I've shown you today is very straightforward. And the other part of changing the lot size, it's probably going to be better to wait till we have something that can figure that out automatically. I mean, you might find some ways of doing it yourself, and you can test that, but it will be more complicated. If the system takes one trade at a time or one or two at a time, it probably will. You could follow what PipStat says, and that wouldn't be a problem. Yeah, the robots. Some of robots will let you take over and use a fixed lot size, and that's what you would have to do. Is whatever PipStat's telling you, you could put that in as the fixed lot size. That'd be one way to do it. Would you set up 2 charts for that comparison? That probably would be the best way to do it, is keep one going with your robot the way it is normally, and then have another account running the robot where you do this technique of semi-automated. So that way you can keep track, see how much it's improving it, or if you need to make some adjustments, that'd be a good idea. Okay. Yeah, what DDSMM did was just calculated lot size only, and it didn't figure out your stop or target. So that's kind of the opposite of what we've been showing you here, where we're taking and figuring out best stops and targets so you can prematurely close a trade or hold a trade for a better target. Another option is to scale out of the trade. Let the robot take the trade, And then what you could do even is take another trade with Pipstat and hold that one with the stop and target. Leave the other robot the way it was. Or you, like I say, just scale out of the trade. Just kind of watch the market for those stops and targets and then close out part of the trade at that level. There's a lot of different options you guys have with this, but the thing is, it takes work. It's not plug and play. I mean, it sort of is as far as it telling you information, but you have to be there to do it. It takes some work, but the benefits are worth it. Like you've seen on this Zulu trade, these guys are definitely putting some hours in, but look at their returns. 1,600% in 35 weeks. 900, 7. There's a huge returns that these guys are making in short couple months. Any other questions before I close things up? So like I say, on Tom's EA, that's the robot that's kind of the big thing going on right now. Like I say, they did already, it was something that already came out about like a year and a half ago, and it had some losses. But currently it's in that same situation. Now's the time to join. Now's the time to jump on board because it's in that drawdown already. And as you can see in the past, if it were to repeat that again, it's about to take off and have a nice run. You always have to notice, it might not work out that way. That's why you might want to still take the scale-in approach, or just don't put all your money in this thing. Just allocate a percentage and try out some of this other stuff I've been showing you. So, anyways, I will probably have another webinar next week. We'll spend more time probably on Tom's EA, since that's what's going on right now. And like I said, we'll also have another webinar about Zulu. One of these days we'll get into all the details about that and some of the followers and or traders that I'm following and some things you can look at there. And then, of course, this is Forex Weekly, so we'll be talking about all kinds of different topics. So if there's some things you want to learn more about, type them in while you're in the webinar. If there's a particular thing that you're interested in, let me know. Currency. Yeah, we can look into that. I don't know if is that a brokerage or is that I don't even know. I don't think I've heard of currency. It sounds familiar. Now, I said that we would talk a little bit more about brokerages. We kind of already did. Talked about FinFX and how they accept U.S. clients. There is one, if you're non-U.S., you might want to check out. It's Pepperstone. Let me just post you that link. Okay, so if you go to that link, TradeWestForex.com/Pepperstone, this is one that a lot of our members have been using for non-U.S. and they have extremely tight spreads, great execution, and have treated our customers well. So, okay, FXDD has Zulu and currency. Yeah, I'll have to look into currency more. Maybe that's something we can talk about when we talk more and get more details about Zulu. Hal says he also likes Trader's Way, and that's one I haven't checked out myself yet, but Hal has definitely tried a lot of brokerages and says he likes that one. Charles says he trades with them as well. Okay, well, if you guys, if you throughout the week, over the weekend or whatever, you have some different things you'd like to learn about, get on our chat or send us an email, and we'll, do some research or put some things together for one of these future Forex Weekly webinars. But we'll be doing these every Friday, just like I did the 101. same time. So we'll probably wrap this one up where we're at. I think you guys we've got a lot of stuff we've covered. We'll get the recordings up as well. Get you an email when the recording's up so you can review. But thanks again for coming, and we'll hope to see you in the next one next week. Have a great weekend.